This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, everybody. Welcome back. This is Joe. We're going to talk about trend change today, but I want to do it in a unique way, something I haven't explained before. There's two different ways that I talk about trend change in my book, Invest Like a Pro. So trend change can come by using a 1, 2, 3 change in trend, just looking at price and using trend lines. And then I also talk about what constitutes a trend using the moving averages. So I want to show you why I use it, why I bring up both methods and how this works in relation to a break of a moving average, what is an official break of a moving average, and how these different types of approaches work together. Once you understand this, I think using multiple timeframes will make a little bit more sense to you. And it also gives us a reason for why we want to go down to the smaller time frame. So let's go ahead and get into this. I'm using the S&P for this example because this is what's taking place right now. I think it's pretty interesting what's taking place. So I want to start with the weekly time frame. And I want you to understand that a break of a moving average, so what I call a break of a moving average, or what I would consider to be a confirmed break of a moving average, is when you close below. So let's zero in on what's taking place right now. So if we go, in fact, I want you to see what's taken place since the market turned in the middle of last year and started to trend to the upside. This is the first close. Well, we had a close back in October below the 18. So if I'm looking at the 18 MA and I'm trying to figure out what is really a break of that 18 MA, what I'm looking for is a close below, and then that is a new marker for me. I'm going to put basically a level. I'm going to figure out what the level is of that low of that bar. And if we break that anytime over the course of the next few weeks, to any degree, if we violate that to the downside, then I would consider this 18-week moving average broken here. Okay. Now that's not what happened. If you notice, we closed below, but then the following bar went right back up. Now, once you go to a new high, once you take out the prior high and you go to a new high, then the process starts all over again. We leave this basically almost as a stop because, breaking that. But if we were to come back down and close below, have another bar that closes below, then we have a new level. Okay, then we would have a new level. If we don't get to a new high, then we just keep the level here, even if we have another close below. So if I close below on this bar here, let's just say, I'm still keeping it at this, the low of this bar as being my trend change sign. I hope this makes sense. So I've got this kind of marker in place until we go to a new high, and then I start the process all over again. So right now, if you notice what's going on right at this point in time, last week we closed below the 18 for the first time since last year, October of last year. All of these violations, see how this came down and broke it, but then closed above. And then we actually haven't had a touch of the 18-week line until now. And then 2 weeks ago, we broke it interweek. By the end of the week, we closed above. Now, this week, we closed below. Now, I'm going to put a marker down, and the low of this bar is 42.88. And today, we are, or I should say, this week, the following week, we're actually below that level. So we're not below it right now, it's come above, but any violation of that tells me that this line is now broken. I think this line is now broken. Now, it's not 100% signal, like every time that happens, the market's going to continue to follow through. But what that tells me is the trend that has been in place since these two lines started rising to the upside is now in violation, and we're in transition. We're not in a downtrend on this time frame, but we violated the uptrend. The 18-week line has now been violated, and we're no longer in an uptrend based on that 18 MA. So there's a difference between being in an uptrend, a downtrend, and in transition. And I think this is in transition in this time frame. Now, what would it take for this to be in a downtrend on this time frame? Well, we'd have to break the trend line, come back up and test, in some way, shape, or form a 2, and then come back down through the low and form a 1, 2, 3 change in trend. So let's go and look at the daily chart. So look at what's taken place. I had a trend line in place. Let me just put that back in. We had a trend line that was broken. If you've been watching any of my Friday videos, I've been talking about trend line. I mean, you could use, any of these trend lines, basically telling you the same thing. We broke a trend line. We came up and tested the high, and now we're coming back up down through this low. So we have a change in trend based on price using a 1, 2, 3 change in trend. Trend line break, test is 2, 3 is coming back down through this low. That's a 1, 2, 3. Notice what's happening on the moving averages. At the same time, this within a day or two of this triggering to the downside, we have 18 below the 40 and both lines declining. That started 2 or 3 days ago. So we're getting confirmation both by the MAs and by the price action doing a 1, 2, 3 change in trend that we have a shift in trend to the downside. Notice that this is taking place at the exact same time that we're confirming a break of the moving average. So I hope you see how this all works together. So we get a violation, a true official break of the 18-week line. And that is when we're actually confirming a trend change on the daily chart. So the higher time frame moving average, 18, is being violated or officially broken at the same time the higher time or the lower time frame daily is officially changing its trend. Do you see that relationship? And the reason why this is a benefit, I'm going to show you now, because let's go back on the hourly chart. I want to show you what took place. So I'm going to clear the board here. So let's show you what took place. Now, look at where these moving averages, you have an 18 crossing down below the 40 and both lines moving down. And I'm just going to use a vertical line to show you the relationship of where this is taking place. Now, if you notice, and this is, if you watch my Friday videos, the next bar here is basically where we bought puts before the decline. Now, that's the first time after a pretty nice move to the upside with no momentum divergence or anything like, with no good momentum confirmation on the higher time frames, that we bought the puts right on this red bar here. But notice what this is. This is the first time we're getting 18 below the 40 and both lines declining. Now go and look at what happened. It was about a day or two before we got confirmation of a break of the 18. You see how we have 18 closed below here, and then we broke it the next day. Now, this is very important because I want you to understand. You see the close. So I want to zero in on the daily chart for a minute. And this is part of the reason why I want you to understand all this and how volatility is different in each time frame. So on a weekly chart, you very rarely get like false signals. But if you notice what took place here, so we had a close below and then the next day it turned back up. We don't have a break of the 18 here. We had another close below here, and then the next day it turned back up. We never took out the low of this bar, so that never constituted a break of the 18. I mean, that's a pretty big drop, but it never really broke the 18 based on the way that I do it. Now, on this bar here, we closed below, and then the next day it gapped down below. It was below this. That would be considered a break of the MA. And then we ended up going to a new high. And now we're getting the break that's actually constituting it's followed up by a trend change. So I wanted to bring this up because I wanted to tell you it's not 100% the way I'm doing this. But I think this is one of the best ways to figure out whether you're breaking a moving average and then getting confirmation using the 1, 2, 3, as well as the moving averages. When the 18 crosses down below the 40 and both lines are declining, you can consider that trend in that time frame to be to the downside now. Now, we want to start the process all over again. And what we have right now is we made a lower low here. We've made a lower high compared to this peak, and now we've gone to a lower low. So I can draw a new trend line in place. So now what we're looking for is a break of this trend line, and then we're back into transitional phase, and we're looking for a shift back to the upside in a 1, 2, 3 going back to the upside. If that happens, then the trend is back to the upside in this specific time frame. Okay, so keep your time frames in order, watch your moving averages to confirm, and then recognize the higher time frame moving average violation. So if we get a true trend, if we get a true 18 break on the high time frame, that should be confirmed by a 1, 2, 3 change in trend on the lower time frame. So use these relationships to help you have confidence. If we get a 1, 2, 3 change in trend in price on the daily, if we get the 18 and the 40, 18 below the 40 and both lines declining on the daily, and we get an 18 true break where the 18 is closed below and then we take out the low of that bar, we have basic confirmation that the short-term trend, the daily trend, is shifting back to the downside. Now we have to see what takes place here. Are we going to create a 1, 2, 3 change in trend and go all the way back down towards the 18-month? Actually, in order to get this to reverse and change the trend, we probably would have to break the 18-month line. If you look at the relationship, that's the way this would have to work. I don't see that as being all that likely. I think this is setting up a situation where we're going to work back towards the 18-month, but I'll talk more about that on Friday's video. Just wanted you to understand this relationship between trend change, the 1, 2, 3, and why I like to use the moving averages to confirm. If you're using the signals from my book and you understand how to look at price and create a 1, 2, 3 and the moving averages to confirm, I think you're going to get a lot better at looking for the right kind of signals for entry. Go ahead and post any questions or comments, and we'll see you next time.